Hello, everyone. This is Noah and John. We are from UrbanDigs, and it is Friday, and this is your weekly Manhattan market update. John, I'm looking at supply. Let's get right to it. 93.23. We're heading the other way. Show me the chart.
You're right. No, that's a 2% decrease from the week before, and it looks like we may have reached peak supply. Trajectory seems to be sort of on the way down. So let's hope this holds going into the holiday season, end of November, early December. But right now, it's looking good for sellers. Less competition.
Good for sellers, not so good for buyers. If you're a buyer out there waiting for that to keep going up and up and up, this is the way this thing changes. It changes on a dime. And we'll break this down on a monthly. We'll break it down on a weekly in just a moment. But this is how fast the market changed. So it looks like I agree. Peak supply might be in for this season. Let's move on to demand. Pending sales, 23.99. Ooh, that's a nice bump up. Johnny, show me the chart.
Yeah, you're right. It's another 6% jump. I mean, it's great to see. We're approaching 2,400 in terms of pending sales. So trajectory on pending sales is heading up. That's good for sellers. And it's also another thing that's not so hot for buyers. So if you were out there and you had a deal to make back in August, September, congratulations, you did pretty well.
Right.
If you're still looking now, you might find yourself a little more competition.
Right. And if you bought something in April, May, or June, congrats, you did fantastic. You did better than anybody. And just if we look down here, John, right, we
Yep.
scroll down just a little bit, right? I do have monthly new supply. I do have monthly contract activity. We did book new numbers, right, for October. And you can see right here, we're down 21% in supply. We're up 30% in contract activity. If you think about that, right, you're down in supply, you're up in contract activity, that gets felt, especially gets felt after you're coming from this shutdown period and this rebound right now. This is the best month that we have seen. So let's just break this down on a weekly basis, John. Let's just move right into it and see whether or not we're on par, on whether or not supply is trending negative or going up. So let's go right to it. 1 week active. Where are we? Ding, 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 ding. 227, John. Show me the chart.
Yep, that's a big drop from the week before. So we're back under 300, and that's the first time we've been under 300 since early June. So it's been a while
Yeah.
since we've been in the 200 range. So I guess part of the question is, I mean, we've talked about peak supply. I mean, have we started to reach seller fatigue here, Noah? Are sellers tired
Yes.
of getting on the market?
Yes, I think we've reached seller fatigue. I think the off season is probably coming a little early. I think people are just going to wait it out. And I quite frankly, again, if you're a buyer out there, what you see out there right now, the options you see out there right now is probably the max of what you're going to see in this cycle right now for this off season, because the next listing period doesn't really begin till mid-January to February.
Yep.
So you have to get until then. You have a good 2.5 months until you get to them. Until then, you're going to see less stuff coming on the market. So what you see right there on the market right now is probably the peak part of this cycle. Very interesting stuff. Let's go to contract sign and look at measure of demand. And that is at 208, over 200. I love it. Show me the chart.
Yeah, it's 208. It's a bit of about a 10% drop from last week, but listen, as you mentioned, we're still over 200, so that's it's fantastic to see that. It's been a long time coming, and I'm hoping we can hold on to that heading into the holiday season.
Yeah, drop all you want. As long as you're over 200, I'm okay with it. Once you start getting into that 140, 150 range that we were for weeks ago for the longest time, that's when it just feels worse. So that is a good to see. John, let me move on to my weekly update. We got one chart to show. We're going to be real short here. Okay. And what we're looking at here is we're breaking down the sub $1 million Manhattan condo sector. Okay. You got $1 million to spend. You're looking to buy a condo. That's what we're looking at here. And we're looking at active
Can't pass the
supply.
board. Got to buy a condo.
Exactly. So, you're looking at here. So now I'm trying to break this market down and figure out what the hell is going on, right? Because we don't look at this market that often. So these blue lines is active supply. Okay. It's active supply. How many listings there are, condominiums under 1 million in Manhattan right over here. That's this number right over here. And then you got the green line right down here, which is your monthly deal volume. So we're measuring monthly deal volume versus active inventory. And the reason I wanted to do this is, number one, look at this jump, right? So look at this jump. So again, if you're looking to buy in Manhattan real estate right now, you got choices, you got options, and we just showed you charts on why that's now going to slow down. So this is most likely going to go the other way over the next couple of months. Now, if I cross this over, right, and I bring this down, you bring yourself back to about mid 2012, fall 2012 levels.
Yeah.
So you're regressing 8 years, Johnny.
Yep. No, it's an interesting point to make. And if, let's take that regression idea. So you shift the market back and you're looking at 2012. All right. So even if we had contracts signed higher in 2012, so a little bit of a more of a frenzied market compared to now, right? The whole idea is that, all right, well, it's 2012 pricing, 2012 dynamic between buyers and sellers. Well, how did that work out for the people who bought in 2012 based on their ability to negotiate with sellers? And I would say that that's a great thing. I think they did pretty well from 2012 versus if you look at the peak times, 2015, 2016, these kind of things, look at how much lower supply was in relative to contract signed. And a lot of those people are still sort of, treading water in terms of their valuations.
Yeah, and quite frankly, I mean, if we're at 92 right now in terms of monthly contract activity, right? This is how many deals were signed under 1 million condos. You got to go back. I mean, you got to go back to like October 2008, where it was 94. Before that, it was September, it was 112. And after that, it went down to the 60s. That was obviously the great financial crisis. But in terms, you're right. In terms of supply, you're back in 2012. In terms of demand, you're back into like the late stage of the great financial crisis. It's just such an intriguing time. And the main point of this is really to show buyers have had it their way for a long time. They've had it their way for a long time. This market fell, it reset. It was a dislocation. We've now bottomed. We've now rebounded. This is now the top of the rebound. I think that supply is now fading. You're probably going to see contract activity start to fade too, but hopefully we keep it going. But that's what it is.
Yeah, I totally agree with you. And there's one more thing I'd like to point out, which is that little check mark on the contract signs post-COVID. So we talked about it heading into COVID. We thought we might see a reverse check mark sort of recovery. And that's exactly what we're seeing in the contract signs there. But it's interesting to see. I don't know what the low number there is. No, I think it's got to be like in 15s, somewhere in the teens. What do you got?
You're looking at 18 in May.
So
in
18,
May
and then it came right back up to sort of and you look at that line on this time scale, it's a mostly stable line. This is not something that's going to go to zero anytime soon. I mean, it got close, don't get me wrong, but we've come right back. So the market exists is what I'm trying to say. And it looks like, the dynamics that you have right now are not going to last.
And the first people that feel it are all the brokers that have the listings that are well priced, right? All the buyer brokers that have those real buyers that are actually seriously looking to buy. And they're like, holy crap, that one that I was looking at just went to contract. And then you start calling about another one. They're like, wait a second, we already got a couple offers and we're negotiating. And you start to say, oh my God, something's starting to change.
Yeah, you're right. This is the time in the market at which the buyers who were frustrated from a few weeks ago and that pool of buyers kind of grows. At that point, any new listing, they all watch it and they can see it within the first split second that it's out, and they know whether or not they're going to pounce on it, and that starts feeding itself. And that's when you start getting a little bit of froth. That we're a ways away from froth, but hey, listen, compared to where we were in June, this is terrific.
Exactly. Let's just keep it up. It's a weird year. We're almost over. Let's go to next year. Let's reset and let's start all over again. But anyway, thank you, John Walkup. I am Noah Rosenblatt. We both are from UrbanDigs. This is your Friday weekly Manhattan market update. Until then, have a great weekend and we'll catch you next time.